Grant Cardone is predicting the biggest crash ever.
Something's gonna happen.
Is there going to be a real estate crash in 2024?
Absolutely not.
Same, but I have a bet with some of my friends that I expect a correction at some point, significant correction, but I don't think it's going to happen next year.
Okay, when do you think it's going to happen?
I don't have a timeline. I really don't. I don't know.
But not next year.
Not next year, no.
Okay, Adam.
I don't think it's going to crash. No. I mean, everybody that's saying that it's going to crash now also said it was going to crash in 2020, in 2021, in 2022, in 2023, and down. So they keep saying it's going to crash, but at some point there's going to be a correction. Look at the stock market. Look at everything. It always goes up. It comes down. It corrects. It always has some type of.
But I think part of it not crashing was artificial inflation. I mean, artificial propping up of the real estate market in 2020 up to now, and that's what prevented it from crashing. Otherwise, we may have had a crash. We may have had a correction.
Do you know the difference between a correction and a crash?
Yes.
A crash is when you hit something. A correction is when you almost hit it and you move around it.
Do you know the proper definition?
Not specifically, no. One's bigger than the other.
Yeah.
So 20% is a crash. Anything over 20%, anything 10% and over, like up to 20% is a correction.
Okay.
And below 10% is just normal.
It's just normal.
Oh, that's cool.
So I'm betting on 30%.
30%.
Really?
Oh, so you're
At
going
some
crash.
point.
Crash.
At some
Okay.
point. Not in the near future, but at some point,
At some
yeah.
point
Yeah.
before we die. Yeah.
Well,
No,
I mean,
of
it can't be
course.
that
I
far
mean,
out.
there's
But part of the
going to be-
reason is what Adam said, that it should. Everyone has been expecting it for the past 5 years. Why hasn't it happened? Because
is
of
this for
COVID.
both resi and commercial?
Commercial's already taken that hit in a lot of places.
Is it?
Yeah,
Really?
significantly. Yeah, all these office buildings.
Depends what it is, but yes.
Yeah,
Yeah.
and interest rates dropping values for commercial. That's already happened. Residential is different, right?
Yes.
Yeah.
So I think residential will take more time. It's tied to the labor market, the job market. We haven't seen that yet. So I don't have a timeline on it, but I feel comfortable saying 30%. If I'm right,
Okay.
we'll review this podcast again.
I like to look at 2024 as the year of opportunities. So
Yeah.
I do think there's going to be a lot of opportunities in the commercial market. Residential, I don't feel that that's there yet. I think that's going to
not.
come the next year. So
Well, the interest rates, excuse me, are going to be dropping.
They already have.
Yeah.
They've dropped a percent and
But
change.
they said they're going to do 3 more drops or 3 more cuts in the next year. You don't think that's going to boost things up, help people get back in
I think
there?
it'll stabilize things. I don't think it's going to drive the prices back up, and especially on the residential side of things. I don't think it's. So I think right now we're seeing prices kind of leveling off, maybe dropping a tiny bit, but they're not dropping 30% or anything close to that.
and you still have tons of people bidding on the same house. There's no inventory.
I've lost houses recently.
Yeah.
I mean,
Yeah.
there's no inventory. But what I think is going to happen is I think the interest rates are going to come down. So right now, let's say they're at maybe 6.5 or so for a conventional regular loan. So let's say they drop another point or two, whatever it is. Then you're going to see people that have these 3.5%, 3.25% interest rates, and you're going to see them start selling their homes because they're going to say, all right, whatever, it's a half a point. I want to move to a bigger house. I don't
Right.
care. But right now, like I have a great interest rate. I'm not selling my house anytime soon
Right.
until the interest rates come back down because otherwise I'm going to spend more money for the same thing that I have now.
But at some point, when you grow out of your house, you're going to be forced to make that decision, and you're going to give up the fact that you have this great interest rate.
Or I'm going to hold it and rent it. That I mean, unless
But then you'll still buy a new house.
Probably not. Probably not rent it because it's your primary home. You'll want to sell it. Tax-free gains.
but I can always borrow that money against it.
That's right.
So why would I sell it? If I have a 2.5%, 2.75% interest rate, why would I sell it? It's free money.
Because
Almost.
you'll borrow 70% of it. You may want the 30% remainder. Just
If you're
Just a
trying to
thought.
really level up to that $2 million house, you may need that 30%.
yes.
Yeah.
I may, but as of now, we've looked into it. Like, you know, my wife wants to look into bigger houses. You know, the family's growing and everything, and she wants to look into other properties. But I'm going to find the exact same house that I'm in now, same size, same square footage, same property, but it's going to cost me an extra $2,000 a month for the same thing that I have now.
So it's not worth it.
That's what I say. She's like, well, we can get a lot of money for our house, but on the other side of things, we're going to spend a lot more per month. So it's really not beneficial in any way. So until the interest rates come back down to a similar playing field. Right now, they're still double what I'm paying.
So then the question is, do the rates come down first, or does your wife get aggravated enough where she wants to move first? And I think a lot of people are going to have that feeling because I think that people can tough it out for 1 or 2 years not wanting to move for an interest rate purpose, but I think at some point that itch is going to come out, and people are just going to say screw it and do it.
Yeah.
Well,
So-
right now, the Housing Affordability Index, so it's the index where 100 means that you can afford, like the people can afford their houses, basically. They, with their 20% down, they can afford their houses. That's 100. In 2006, it was at 107. Now it's at 91. So it's basically going down. People can't afford the mortgages,
Which
basically.
is good for rental properties.
Correct.
Yeah.
Yes.
I actually
Correct.
heard
That's why the rents are going up.
it's the least. Not the least time, but it's the most difficult time in history to afford a home.
I did
Wow.
hear that,
Yeah, yeah. So that housing affordability index. Yeah, it's the toughest time right now to buy a house.
That's why you're going to buy value add properties.
Mhm.
Get something that nobody else wants, fix it up, and make it your home.
So, like, a crash in 2024 would include commercial. It would include investing. What do you guys think is going to happen in that realm? Take it out of residential. What's going to happen in the world of investing?
Well, as Omar indicated earlier, higher interest rates make it more difficult to sell for higher prices. So the rental income, unless that's rising at the same time, which it's not, because a lot of the office market, for instance, there's not a lot of tenants out there due to work from home. So the office market prices are falling, the interest rates
Yeah.
are rising, and therefore the value of the office product is falling. So it's a great time to buy office buildings.
Yeah. No. If you,
But what
if-
are you going to do with them? If
We-
no
we
one ever
tried
goes
to
back to the
reposition them.
office.
Convert them into that house you couldn't find.
yeah.
There you go.
And I think commercial in general is the market significantly slowed down just because it's so closely tied to interest rates, right? So once interest rates rise, commercial values drop right off the bat because it's tied to interest rates and the cash flow.
People are getting tighter with their numbers, definitely 100%. And there are less transactions happening. But sometimes with business, you have to sell. You
Yeah.
have to buy. So there's still activity there, but it's definitely not what it was.
It's not, yeah.
Yeah.
So you said that it already crashed, though. Do you think it's gone the lowest it's going to
No,
go?
absolutely not.
It
I don't.
depends on the rates.
I don't think it's gotten the lowest.
If the rates start coming down again, I think
Then
that's going to
it'll
be
go back
that's
up.
going to help.
So it depends on sectors as well, right? Because past few years, the multifamily syndication industry is blown up. Why? Because interest rates have been like 3%. So all they've been doing is buying existing properties, refinancing them
Yes.
under 3% and making a boatload of money. All those people have ARMs that are resetting in 5 years. And if they don't get the right rate in those 5 years, they're losing these properties. That's happening across
They
the board.
could
right now.
lose the properties. A lot of the banks are not going to want them to lose their properties. So
Yeah.
the banks will help, I'm sure, modify and try to make it work. But yeah, that could
I hope
happen.
so.
But what you're saying, or what I'm hearing, is that in 2025, 2026, maybe 2027, a lot of people are going to be losing their multifamily properties. So if you're a person who's just getting into investing, maybe you should be saving up for that time to swoop out from underneath them.
I don't think this is an individual investor's game. What I mean is
The bigger properties.
the bigger properties.
Okay.
I don't think they'll lose them. They'll be bought up by someone else who has more money. That market's always going to be there. But it's a real issue with commercial right now because as soon as rates jumped up, these people couldn't refinance. And they didn't underwrite these properly because they didn't anticipate that they should have, but they didn't. And because of that, if the property doesn't cash flow, they're out of luck.
Yeah. It's all based on the tenancies and,
Yeah.
and the rents.
You're just talking about ARMs, though, adjustable rate mortgages.
But most of those are ARMs.
yeah,
right?
on the commercial end.
Yes.
Because in the residential world, I would say 10% of the loans, if not less than I've done, of the
Yeah.
deals that I've done are ARMs.
People are still doing ARMs in
Here and there.
residential?
Not much. Not like I said, not as much. Just a few percent of my deals.
It depends on the product that the bank offers and how badly the person wants to get into the house and
Yeah.
what the rules are with the debt coverage ratios.
I
There's-
just feel as though people should have learned from 2006,
it's not about
2007.
It's not about learning. Sometimes you can't
Yeah.
get the rate that you need with a 30-year fixed product, and you can't qualify for the house with a 30-year fixed product. So that bank only offers the product that will get you into that property with an ARM.
And you're betting on the fact that hopefully interest rates come back down before your ARM is up, before the 5-year ARM, 7-year ARM, whenever the time
Yeah.
period is.
Yep.
If not, you might be in trouble. But once again, on the residential side, I'm not seeing a lot of ARMs.
Yeah,
And if you
Yeah.
keep a good payment track record and you work with smaller local banks, usually they work with you. It's the big banks that I feel don't help out as much.
Yeah.
But
Yeah.
adjustable rate mortgage is what an ARM is.
Yep.
So what does that mean?
So essentially, you're going to have a set rate for 5 years, 7 years, whatever that first number is. So it's going to say an ARM something / something, whatever that first number is, and then it's going to go with the market a little bit.
Right.
But I think if I'm not mistaken, I think there's a cap on how much it can go up. It doesn't.
I think that there's different programs for different banks.
Yeah.
You know, obviously residential is more regulated than some of the commercial loans are, but
Yeah.
it's all there and it's all set in stone before you take the loan.
So what you're saying is for 5 years, I'm going to have one interest rate. And then at the end of that 5 years, it adjusts to whatever is current. So if 5 years ago I had an ARM.
It's a predetermined adjustment.
Oh, it's a predetermined
Right.
adjustment.
So, but it's
Okay.
based off of, let's say, the 5-year treasury, or it's based
Got
off
it.
of some
Okay.
type of rate, and then they're adding points to that rate.
Understood.
So hold on. When you say predetermined, the time frame is predetermined.
Yeah, but
Time frame
the
is
rate- the rate is
predetermined.
not.
The rate's not, but the
Oh,
increase
no.
is.
The rate is based off of what's going on
Yeah.
in
But
the
the
current
increase
market.
is predetermined.
How so?
How so?
The time period, not the
time
amount.
period. So the commercial loans, they say to you, you're going to pay 200 basis points over whatever the 5-year treasury is at that point. So that 200 the 200 basis points, let's say, is pre-negotiated at the onset of your loan.
That is, but
Yeah.
we don't know what the 5-year treasury is.
Correct, 100%.
Right, okay.
But the increase is predetermined based on that number. So it's not like they're both random. One of them is going to be fixed, and one of them
is
will be random.
Yeah.
Got it?
Yes, I do. It doesn't sound fun.
It's all
Only
luck of the draw.
if the interest rates have gone
So
down.
most
is it
people, when
fun?
they do commercial loans, they don't always negotiate both parts of it. So what I learned early on is some banks are going to give you this really great rate now, but when when the adjustment comes, they're going to try to charge you 350 basis points over whatever factor they're using. That's negotiable.
Okay.
So I always try to negotiate down as low as possible.
Now,
But everybody knows that.
what's a basis point?
What is it?
Yeah.
What's a basis point?
It sounds real
tell me.
fancy.
It does sound fancy.
It's really easy if you think about it.
Yeah, it is. I don't.
What is it?
350 basis points.
That sounds like a lot too. What
It
is
sounds like a lot, but 100 basis point is 1%.
Point,
Yeah.
1%.
Oh, it's just
1
one
point,
So it's
yeah.
3%. 3.5%.
So if the 5-year
3.5%,
treasury is
yeah.
5%, and then it's 200 basis points, it's now 7%.
Okay, but the thing is, back in 2020 or 2021, if I got a 3%
Right.
rate, right? And then now it's up to 7%. And this is where my ARM comes in. So I'm going to have 2% over the 7%.
You could have a very large increase.
Right, that's huge.
Yeah.
Right, and you may not be able to afford the property anymore.
Correct.
Right.
But
Which
at
is
times when
happening.
interest rates were 3%, you obviously would have been silly to take out an ARM at that point. Just lock it in a
Right.
30-year
Okay.
and be done with it. But now that rates are higher, when they're 7, 8%, that's
Now
where people
you
take
might want to
advantage
do
of
it. Okay, now
And
I
some of the
understand.
loans may cap what the rate could be.
Okay, that's
So
smart.
there could be a cap in there. So even though it would increase to 7, there could be a cap at 5%. It just depends on the loan.
Okay.
But you could be in for a very rough time.
Yeah.
Yeah.
Or an interesting time. You may have to get a second job.
Interest.
Interesting.
Get some roommates. An interesting time with some roommates.
So Grant Cardone is predicting the biggest crash ever to ever come on.
When did he
What year?
last
When?
predict a crash?
Oh, he's had a bunch of predictions.
Okay, and have any of them come true?
Back in 2020, it was supposed to
I think he predicted
crash.
he was going to make a lot of money,
Which
It
he
was-
did.
which
Wow.
he did.
Which he did.
All right.
It was supposed to crash in 2020. In February of 2022, he said it was going to crash by that June. And now he's saying it's going to crash again.
Did he tell
So
you when?
He's the
boy who cried wolf.
He's the boy who cried wolf. Yep. Or cried crash.
I mean, at some
even-
point, something's gonna happen. But is it next year? Nobody really knows. I mean, here's my take on it. If you knew what the market was really going to do and how to predict the market, you would have made
Right.
a ton of money in the last 3 years. You would have bought everything in 2020 when everybody was worried at the very beginning of COVID. You would have bought everything, and you would be worth a ton right now.
True.
But most people didn't. Most people, personally, I thought the market was going to crash too. I didn't. I had no idea.
You and Grant Cardone.
I know.
I actually had a situation where I had some partners, and one of my partners panicked, and right during COVID, and he was like, "Get me out of everything," and he sold everything that he had for 25% of what the value was. And there was one opportunity that I was a partner in, and I picked up his shares for 25% of what he paid for it. So I'm very
Has
happy.
he come
with
back to you and said, I want it back?
It doesn't work that way.
Yeah.
I took the risk. I didn't know what was going to
Yeah.
happen.
Yeah.
COVID could have killed everything. I had no idea, but I took the risk. I did it, and I deserve that reward, right?
Yeah.
No, totally.
Yeah.
Yeah.
Totally.
Got to be in it to win it. You got to try. You got to take risks. If you don't take risks, there's no
risk,
reward.
no reward.
Yep.
So Adam, since you are an aggressive $1.8 billion residential agent, tell me, if I was a first-time home buyer and I really needed to go out there next year and buy a home, what advice would you give me? How would you make it happen with all these scenarios of the rates going up and down and the prices so high and the hundreds of offers per house? What would you do?
Well, first of all, you work with somebody that's going to be aggressive on your part, that knows what they're doing and knows how to negotiate on your behalf. Because it's not always dollars and cents. There's other things that go into getting an accepted offer. But on top of that, don't first of all, don't overextend yourself. So interest rates right now, let's say they're 6.5% as of right around, right now. So 6.5%. So just know that you can afford that monthly payment. Don't say, I really love this house. I really need it. I need it. And like I said, spend more than you're comfortable with, because when stuff happens, you just got to be able to afford where you're living. And the other thing is, don't get emotional. I know there's a lot of emotions in buying a house because you're going to raise your family there and all of this, but don't get emotional. Find a house that you absolutely love, that checks off all, if not all, most of the boxes that you're looking for. You might have to, do a little bit of, you might have to give up a few of your must-haves, if you will. But find a house that you love and just go for it. That's really it. But find somebody that's going to really be on your team and knows the market where you're buying.
So how do I compete with 10 other offers on the same house?
We did it.
You did it. Yeah. We did it with Noelle.
I wrote a love letter. It was beautiful. I was like,
With
I'm
pictures.
gonna right, and showed the boys. I was like, my children are gonna go to the middle school, and it's so exciting. I talked about how we were gonna get married on the property, and she bought it. I mean, it did happen. It wasn't. It wasn't
a con. It was
no,
real.
It wasn't
Insert
a con.
wedding pictures
Right.
here.
But I mean,
Did you find that on the internet, like how to write a love letter?
Well,
Or did
no,
Adam teach
I
you?
just knew. I mean, I guess I'd seen different ways to
Right.
get offers accepted, and I just really worked on that letter, and it worked with her because we weren't the highest,
You
and
were
we
not
weren't
the
the
highest.
only. Right?
I wasn't even the highest when I bought my house. I know it was
Right.
a different market. It was 20.
Did you do a love
2015.
letter too?
I did.
Yeah. Ooh.
And they liked us. They saw a little bit of themselves in us. There's a bunch of ways. It's not just about the money, right? In the end of the day, it's about the relationship, getting the sellers and the buyers on the same page,
Right.
working with the other agent. So as a buyer's agent, my job, if I'm representing you on the buying side, is to build that relationship with the other agent so they want to work with me.
So now, when Noelle bought her house, you were her agent at the time.
Right.
Did
He's
you-
not my husband.
Right.
He's my agent.
Did you advise Noelle to do the love letter, or did Noelle kind of figure it out on her own?
I think I advised you, if I'm not mistaken.
Yeah, I think I was like, well, what about a love letter? And he was like, that's a good idea. And he sort of walked me through it.
It depends on the type of house you're
Yeah.
buying, though. If you're buying a foreclosure, the bank's going to take
Right.
that love letter and throw it in the trash.
Right.
Like,
Right.
you have it's somebody that's lived there for a while, that loves the house, and not everybody's going to accept it. Not everybody's going to look at it.
And it doesn't work every time because there was another house that we looked at, and I wrote the love letter, and they didn't care.
Well, maybe they didn't sense the love in your letter.
Maybe not, but the person who we did get the house from, they had weddings and bar mitzvahs and engagement parties on property, so that meant a lot to them.
Got it.
And so, like, I have a client, we're under contract right now on a house, asking 2.4. And my clients originally came to me and said, we want to offer 2.2 on the house. And I said, just back off a second. Let me just do my, work my magic and do my job. I had a conversation with the other agent, and I told my clients, offer 2.15. Worst case, we'll get a counteroffer. They accepted the offer at 2.15.
Nice.
So now my clients have $50,000, and it was a cash deal too. So they have $50,000 cash to take me on a
to buy
trip.
you a gift.
Exactly. Take me on vacation. But so that's the benefit of working with an experienced buyer's agent is, like, I know the conversation to have. I know how to negotiate on your behalf to get you the best deal possible. That's what I'm here for. That's all I'm here for. 100% is just make you happy.
So doesn't that tie back into the whole lawsuit thing, where if you had your own buyer's rep, then people could specialize in that. You hire them separately, and look, you just saved $50,000 for somebody.
But
They're not going to see it.
Exactly. People
Yeah.
are short-sighted. They're not going
Yeah.
to see the benefit to it. They're going to say, "Wow, I could save $20,000, whatever the number is."
By going on Trulia or Zillow myself, but it doesn't work like that.
All right.
And once again, I still hold the belief that everything is all bundled into this price. So if somebody wants 900,000, they want a net 900,000. That's what the magic number is to make them move. So then you take the commissions, you take the fees and the taxes and the attorney's fees and all that stuff, and you add it in.
Okay.
So that's where that number comes from. It's not a number we pull out of thin air.
Okay.
And that's what their seller's agent is doing with them.
Exactly.
They're making sure that that number bundles in everything.
And that's what a lot of people say.
supposed to
My
have.
client wants the net X amount.
So obviously we just talked about the love letter on how to do that. So now let's say we can't find a house, right? So Omar, you've had a ton of experience in finding stuff that's not for sale and wholesaling.
Sure.
Like, what advice would you give to somebody who desperately wanted a house, didn't have a house to write a love letter for? How would you get that house for them?
I would tell them to wait it out.
Because the crash is coming.
Not so much the crash, but you have to be. The market right now is what it is, and there's a lot of people that it's not a good time for them to buy. I could suggest things like go door knocking, ask your neighbors, send out letters to local places where you may be interested in living. But a realtor should be the one typically doing that.
Okay.
So the best thing for someone who's
What should that realtor be doing? What should Adam do to get you a house?
take you door to door, ask the seller if they want to sell.
Would not take the buyer.
I'm kidding.
The buyer
No,
door to
what
door.
a
Bring
typical
like the
agent.
crying baby, or like
No,
this
so
baby needs a home.
So what a lot of realtors do, and buyers can do this themselves, is figure out which areas they want to live in and start soliciting off-market properties. Send them letters and say, I'm looking in this area. Are you interested in selling? So that's a great tactic to find people who may be interested in selling, and now they just got a buyer.
And then have their real estate agent help them negotiate it after
No,
that
keep the
person
realtor
answers.
out, go direct, and get rid of NAR.
Oh.
Fighting words.
Don't get rid
Right?
of NAR. But no, in many of those cases, they go straight to the seller. They come up with a price, and they'll do their due diligence. They'll get their appraisal. So that's actually a good case of where you don't need a realtor, and these transactions happen all the time.
But this isn't a bad time to, I mean, it's bad time because of the inventory, but most people have jobs. Like the unemployment rate is pretty low right now. So
Yeah.
with most people having a job, it's a time of good security. Like people feel like they could be able to buy if they could afford it.
Agreed.
You're planning on living in your house for quite a while, right? You're not. You didn't buy it for 5 years.
Nope.
So that my take on it is, look, the market's gonna go up, it's gonna go down, it's gonna go up, it's gonna keep doing that. You're gonna live there for 30 years. So just you're here for the long.
30 years.
Dun, dun, dun. So that's my take on it as well. Is also
It is our forever home.
you're gonna be here forever. So you're gonna be able to weather those storms, whatever happens, up, down. You're locked in. You have a 30-year rate. Nothing's changing. Your monthly payment, other than taxes, your monthly payment doesn't change. So you're locked in. You're gonna live there. This is your forever home. You're gonna live in this house for forever. Hopefully, hundreds and hundreds of years.
We just said 30 years.
30 years.
30
years.
seconds ago, we said 30
That's
years.
alone. Hopefully, she's gonna be there longer than 30 years. But you're locked in with your payment, right? So
Right.
you're going to weather the storm. It's going to go up. The value is going to go down. Nothing matters until you go to sell it, right?
Okay.
So over time, the value is going to go up. It's going to go down. It's going to go up. it's gonna
Taxes,
go down.
but okay.
Taxes are the only thing that's going to change year after year. But your monthly payment's going to stay the same. Other than that, and I guess interest, or insurance.
Ugh, insurance, yeah.
But that's a nominal amount. That shouldn't really affect your living.
No, the flood insurance is a lot, though. It was a lot.
I didn't know you had flood insurance.
We got the flood insurance because of the pond. Just
and
in
you
case.
thought you were going to use it last weekend, right?
Oh, yeah, when I saw the water rising, it did.
You're like, we got flood insurance.
I was
We're
like,
good.
"Yay."
Did you ever find your kayaks, by the way?
No, they didn't float away.
Okay.
They didn't float, but
She
they were
had
in the
she
water.
had her canoes and her kayaks like at the edge.
Yeah.
Oh,
and
they
I
didn't
thought
float away?
No, they
And
didn't
they
float
I was
weren't-
going
away.
to say,
they
I have some
weren't
new
tied
kayaks
off.
for sale.
There you go.
So what about the seller side of that?
Whether,
He talked about the buyer side of that.
It's a great
What about
time to
the
sell.
seller?
is it
Yeah,
a great time
there's,
to sell?
There's
Is
nothing
it?
on the market.
Yeah.
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 But once again, it goes back to the other question of what do you do? I'm locked in at 2.75%. So do I keep that? Do I need to use all the money that I have in there? I have a lot of equity in my house. Or can I hold on to that and use some other money and hold on to that and rent it out?
I don't like renting single family homes. I'd rather sell
Same.
it and buy multifamily property. So I would sell.
I would too.
Yeah. And I did sell. I moved into a new house 2 years ago, a year and a half ago, and I had that same deliberation. Do I keep the house that I've had for 14 years and rent it? Because I was in a great market. I could have really done a nice rental price there, but I didn't want to deal with it. It wasn't worth it to me.
Yeah, I think in New Jersey, it almost never makes sense to rent out your single-family home as a primary home. Almost never. The math never works out.
I tried really hard to get David's house, to get him to rent it
Yeah.
out, and it just didn't. No matter how I
Yeah.
did my funny girl math, it just wouldn't work out.
Plus, when
So
you sell your
it was-
primary residence, it's tax-free gains.
Yeah.
You won't get that off investment properties. So why rent something for a few $100s a month when you can get a lump sum?
100%.
Yeah.
You know, I would never do it. I have one rental property that is a single family home, but it's my grandfather's house. So it was a house that he built, and was not going to sell it. But I'm not
That's a
going to live
different-
there.
that's a
So
different
it was,
story.
Yeah, it was unique. But other than that, I would never do it.
So we have one question from a viewer, and Mary, who's here in Hackensack.
Hi, Mary.
Hi, Mary. She says, "I'm getting married this spring.
Congratulations.
Yay, marriage. We're currently renting, and it's been a dream of us to own our own home. Is this a time to look and get our own home? Should they do it? They're getting married. There's already the expense of the wedding, but they're getting married. They want to buy. Should they buy?"
If you can get your parents or your in-laws to pay for the house, absolutely.
Yes.
Ah.
If you're both high-income earners, then yes.
Or, if you're going to make some money off the wedding. I mean, not make money off the wedding, but the
It's
gifts.
okay to make money off the wedding.
Don't,
it's
but
okay.
you don't want to put it that way.
It's gifts.
It sounds
to
gauche.
Start your life.
Right.
Yes, you're right.
But if you're going to get money from the wedding,
If you
then
make
yeah.
money off the wedding, donate it. Don't use it to buy your house.
No, use
The
it
real
to buy
question
your
is,
house.
can you afford to buy a house?
Yeah,
Right.
that's it.
Can you you can kind of look at what homes are selling for right now. Take that, the interest rate, taxes, and can you afford that monthly payment? Because once again, back to they're going to most likely live there and raise a family there. This is hopefully a forever home. You're going to live there for a long time. You're going
Yeah, but that's their first home.
They're probably not going to live there for a long time. Yeah, well, but 10 years is 10 years. It's not
You know
nothing.
what we say: date, marry the house, date the rate. So the rates
You
are
can
going to
always
come down. You
refinance.
can always refinance. It's a question of if they can find a home, and then it's more about the cash flow. What are they making? And the home that they can find, does it make sense in their cash flow? Whether or
Yeah.
not they can afford it, like you said before, not to overextend themselves.
So there are a lot of variables, but what I'm hearing is if they can afford it, then go ahead, do it.
and love it. You have to love the home.
Don't wait for the right time, because the right time is arbitrary, like in the
So-
market, right?
Yeah, and remember, we talked about in other scenarios, what is an asset, right? Everybody thinks their home is an asset, and it's really a liability. And if they want to buy an investment property, go buy the investment property. A house is not necessarily an asset,
Right.
and it's about where you want to live. And if you just get married, you may not know where you want to live yet. So it's okay to rent for a while
Yeah.
until you figure it out.
So an asset is something that makes you money. A
Yes.
liability is something that sucks money from your
Right.
body and your soul. And,
And
your
especially
house sucks money
especially
from you.
today with the house prices so high, right? And we're not sure when Omar and Adam think the crash is coming, but
I think we have time.
We have time, but we all know that the prices are probably going to drop at some point.
They have
Right.
to.
And maybe you wait it out, like Omar said, you wait a couple of years and then you buy it.
Yeah.
I say, Mary, if you want to buy and you can afford it, go buy a house. Go get your house.
If you're going to live there for 10 years, the chances are you're going to be fine.
Yep.
If you're going to buy the house and live there for 2 years, then there's more
Unless
concern.
it's a value add.
Right, unless
If
it's a value add,
and
which
it's
is
a fixer-upper or
fixer-
something like
right.
that.
Or if it's an investment property that's cash flowing,
That's,
then you're good.
that's a different story.
Yes, like if you're buying
But that's
a
what I would do.
three-family.
Looking back, like I bought my house, like I said, a little over 8 years ago. Looking back, the only thing I would have done different is I would have bought a multifamily.
Yes.
That's my first one.
Use an FHA loan.
Use an FHA loan,
3% down.
3.5%, buy the house, live there for a year or two, move out, get a single family. Now I have an income property.
Oh, Mary, I think, Mary, you should do this.
Yes,
You
I
should
think
do this,
that's
Mary.
So what should Mary do? She should do that.
She
Yeah.
should buy a multifamily home. She can live upstairs with the new hubby.
And just deal with
rent
it for
out
a year.
the bottom
Yeah.
and deal with it for a year.
That's it. And then who knows what maybe the market will do what Omar's thinking. Maybe you'll have a better time buying another single family house.
Right?
Not that soon, but sure.
So do you think she should buy a two-family?
Yeah, I think every person starting out, their best way to build wealth and build an asset is to get a multifamily, not a single family. Unless you could
Right.
comfortably afford it, you're high income earners, and that's not the right. I mean, the right thing to do would be.
But
to
now
get
they're going to be a
multi.
dual income household, so they buy the multifamily, they stick it out for a year, and then they have sky's the limits afterwards.
And then if you're each making $1 million and you're making $2 million a year, then it doesn't matter what you do. So go have fun.
Yeah.
Awesome. All right. So we have gone through a lot today. We deciphered that there will not be a crash. Is that what I'm
In the
hearing?
next year.
Yeah.
That's what
In the
Omar,
next year.
Omar doesn't feel that way.
Not in 2024.
But there will be a correction.
There will be a correction in 2025.
Maybe. Yeah.
Maybe.
Yeah.
We can't get you
not
to
not
commit.
next year. I can't commit.
Commit.
'Cause
Commit so I can
there's
come
a lot
back
of
to it.
There's a lot of artificial things happening to this, keeping the
So all we know
market
from this
from
discussion
crashing.
is there's not going to be a crash in 2023. Okay.
Four. No.
Four.
We know in 2024. Sorry. We know that Mary should buy a 3 or 2 family home.
Yeah.
Or 4-family.
Right.
If she can.
Rock it
Yeah.
out, Mary.
Or 4 family.
Anything
And-
that FHA allows you to buy, which is up to 4-family.
Okay,
That's about
there
it.
you
All
go.
right. Thanks for watching The Real Estate Mix. Hit the like and subscribe button and leave a comment letting us know what you think is going to happen in 2024. See you next episode.